Hello, hello, hello. Happy New Year, everybody. Test, test, test. 1, 2, 3. Test, test, test. 1, 2, 3. Give me one moment here. What's up, Barkster? What's up, Raya? Hello, hello. Desktop audio seems to be. Let me see here. Okay, my desktop audio is working. Test, test. Okay. Yeah, we're good. We're good. Oh, I got the flu. Bummer. All right, we'll get into this now. Making sure all the streams are live and working. We got YouTube in the house. We got Twitch in the house. What's up, Perceptive Trader? Barkshire, are you on both streams? Or no, maybe I just saw your comment through the OBS. I was like, wait a second here. You watching it on YouTube and Twitch? Nice. And then we are on X, because I finally figured out how that works. All right, it is a new year. And yep, I just turned it on just so we can try to save the market here. You know, it's coming down a little bit, but we'll look into kind of where we stand within everything. And we're going to look at some individual stocks. So if you have stocks that you want me to pull up, make sure to put them in the chat. I'll try to keep an eye on them. We'll make out a list. We'll go over some various names, so forth. Give me a second here. Look at some sectors. We'll retouch up on some of the expected moves if you watched last night's brief. Is it a half trading day? I don't know. I don't think so. I don't believe it is. Okay. So there is some interesting action going on right now. Quite a bit of volume, actually. You know, to be quite fair, quite a bit of volume, quite a bit of moves on various names for being the first trading day of the year, because we typically have, you know, a lot of people off still on holiday or vacation. But we are seeing some stocks that have like been underperforming, just taking like the brunt of the hits today. So, you know, I'm looking at my Discord and I'm seeing the daily expected moves, the daily eyeball alerts, and getting a lot of 2 standard deviation hits on just a lot of different names. And it seems almost like, I feel like this being the situation, it's kind of just positioning, repositioning, maybe tax loss harvesting. You know, there could be various factors to this as what we're seeing, because some of these names are kind of getting pretty hit pretty hard. And I don't necessarily think that that is anything to overly like worry about right out of the gate, right? We need more data. I think one day, excluding today and this last week of trade, if you're really thinking too hard about this last week, including today, I think you got to throw that out kind of the window, because the price action's been wonky. Volume's been off. It's holiday. It's end of year, end of quarter. Now we have a new year. Now we're repositioning. So take that into account as we're seeing kind of some weird market behavior. I think come out of the January 2nd, January 3rd, maybe, you know, after this week, let's say, maybe even after next week, we start to see more normalized type things, and we could start to identify early trends. If that makes sense. It could be just repositioning, right? That's what I mean. Okay, so give me a second here. So if we're looking at SPY right now, we are at the lower weekly implied range. We came into the lower eyeball level right here, and we're kind of just floating in and around it now. In last night's brief, when we touched on the 15-minute time frame at the last part of the video, I said it's pretty normal to just doodle around the lower weekly implied move. So if we were to get a move higher or pop higher, it's pretty common to come back in, chop around, do whatever, and that's kind of what we're doing. So overall, where are we at? We're flat on the trading session. It's really nothing too crazy. It's just we saw a nice big pop out of the gate. People get excited. It completely faded. And this is coming on the back of mostly the larger market cap names. And you can see that in something like Apple, right? Apple, we got this nice pop out of the gate, and then the whole thing reversed all the way down to its lower implied move. You saw the same thing with Google. Nice big pop, big reversal. What are we doing? Well, we're starting to try to find a bottom back. Okay, Microsoft is one of the laggards here, down 2%. This one was basically straight down. It's starting to level out a little bit here, and that's the same with Amazon. We saw a nice big pop to the upper, and then this thing just got shot right back down to the lower implied move. Meta, once again, outside of the weekly implied move, we're trying to find some sort of a ground here, right? Trying to find our footing. Tesla is holding the lows of the trading session as it stands right now. Yeah, Adobe was one that I traded this morning. Adobe was one that had that 2 standard deviation move alert, and it was right here where I started trading it when it broke this trend, and I traded it up. And when I looked at my screen, it was right at around these areas, and I ended up I was like, I'm probably gonna go live. I'm just gonna exit. Actually, wait a second. I don't know if I have a little bit left. Give me a second. I do have a little bit left. So I scaled out over here, and apparently I still have a quarter of the position left. So whatever, that's fine. And then the same thing was with CRM today. CRM, right? We broke this trend outside of the 2 standard deviation move, and we came back into it, and I got out of my position at daily VWAP. Okay, these are just coming from the, if you're in the Discord, you probably saw these alerts pop up. And you might be like, well, why didn't you buy the 2 standard deviation move? It's simply because if I were to buy the 2 standard deviation move, it's going to be a small amount, because I ultimately look for, the trend to break, right? And this is a pretty clean trend. Same with Adobe. And there's quite a bit of these today. So we can go through some of those in a moment. Getting a little bit moved back here. Not all surprising to see a move back here. As we said, the market's kind of in a choppy range, and then we have that 68.50, which for the in terms of gamma for the day, that's kind of the larger, or was the larger level. It was right here. We've actually shifted a little bit here, but 68.50 at the beginning of the day was one of the larger 0 DTE levels, and you can see that right over here as we're kind of coming back into it. NQ is over here on the right-hand side of my chart. Still much of a laggard, but we're trying to put in a higher low, trying to find some sort of ground here. We'll see if we can do anything with that. Sorry, my broker keeps on kicking me out of my platform, and I don't know why, so I want it open so I can keep an eye on it. Give me a moment. All right, there. Sheesh. Logging me out. There we go. Alrighty. Okay. Interesting thing with CRM right here. I was noticing CRM came into, and it kind of got rejected from last year's VWAP. So we're kind of right there. So names like this, like Salesforce, this is something that I'd probably pay attention to going into this next year. Not necessarily just CRM, but I would say keep an eye on last year's volume weighted average price, because a lot of stocks were been rejecting from that. And now we have a new year-to-date anchored VWAP. So if CRM gets above this year's VWAP, And then last year's VWAP, that might open the door for, higher price action and something like this. I was noticing this same thing actually take place today with Target. And look at Target, how it's, and we talked about this one on last night's brief, but the anchor VWAP from last year, it was rejecting, it's rejecting. And now, we're up on the trading session and we're trying to butt our head right back into that year-to-date VWAP.
Pinterest in 2026.
Last year VWAP.
So OpenAI is predicted to buy Pinterest in 2026, according to Information Reporter. Just suggesting OpenAI could be interested in Pinterest's image data and advertising business and merchant relationships.
That was some news on Pinterest about OpenAI potentially buying Pinterest or acquiring them or something like that. And Pinterest is getting some volume right here with that news. All right, let's take a look at some of these names that everyone's posting up. Pinterest really starting to move. Pinterest, by the way, is this one's been beaten down pretty severely. So if any of that news is actually accurate or correct, perhaps that opens the door for higher price action here in Pinterest as well. Starting to move with some good volume. Okay. I'm going to go back over here, see what we see.
It's just worth noting with this article in the information, I do believe it's just part of the information's predictions for the year. They are predicting OpenAI could buy Pinterest in 2026. I've seen Pinterest shares moving higher in recent trade too, bear in mind.
But now I'm all of a sudden getting all these alerts. No alerts all day, and then all of a sudden I'm getting fried with them. We're getting some pretty high tick readings. So it's basically what it's showing us here is we're just kind of floating around these higher tick readings, which is interesting because it's coming from other markets. It's not the big tech. So we're clearly a rotation taking place right now. Big tech is being left behind, and we're getting a lot of these other names start to participate. And when I even look at like the Analyze tab, and we look at, the Market Watch tab, we're looking at 58 advancing stocks, 43 declining stocks. So even on today's down move outside of the weekly implied move, that's what I mean. It just seems like a lot of rotations taking place, which clearly is what we're seeing here. All right, so I'm going to go ahead and go into the various names that everyone's been posting about. So we had LDOS first. Just take a look here at LDOS, LDOS. And, this chart doesn't look all too horrible, but in the shorter, the medium term, right, we're starting to see these lower highs, these lower lows. So you do want to see, obviously, this strength come in and then potentially do something like that. And then it gives you a better risk to reward in this area. That would be the risk. And then if that's the case, then you might look at a larger time frame and you might, wow, if it actually, does come up here and start to even compress more up and around 200, this can make for, quite the big, continuation pattern, right? If you look at the weekly chart, this is kind of what it looks like. It looks fairly clean. We're just kind of going through a little bit of a shorter term consolidation. That's at least what it stands for right now. If it breaks down, obviously it's no longer consolidation, but I would like to see it back, back in and above this week's high, which is not too far off, but that could be a good sign maybe into next week. Echo. I don't know about Echo. I don't know what that is. Meta. Meta's underneath last year's year-to-date volume weighted average price. So you want to see this recoup. You want to see it recoup these. So entering right now would be a little bit risky because it kind of opens the door for lower price actions, retag of this trend line. But if we do start to see Meta pick up and get above, this year's high and or back above that 200-day moving average, maybe tighten up a little bit, I think that is going to be a better sign. But right now it's kind of saying, hey, careful right in and around these areas. And I wouldn't be shocked if we, surprise to the downside. So for me, for something like Meta, I would prefer to see strength before just entering into something like that. And Micron, I wouldn't chase up at these levels, look for consolidations, but massive move here in Micron. Okay, continuing from that big earnings move over here. When you get big earnings moves, you typically can get follow through. And then what I like to look for is 7 to 10 days of consolidation at some point, and then try to play some sort of earnings continuation trade. Dang, we are getting a lot of high tick readings here. Is my stuff even working here? What is going on? It is. Let me check on my Adobe trade. That ain't even moving. We were looking at TTMI. That was asked. I mean, this thing went far and fast, right? I like to look for the tighter consolidation. So it's kind of in that distribution / more volatile phase. So if anything, I would want more time to take place in something like this to give me better risk to reward setups. Like I said, I do like tighter price action and more consolidated patterns. And you can see as we were tight, we moved higher, consolidated, and now it's a little bit crazy right now, right? And this is kind of moving with what the market's doing. So for me, I would just look for the base to build out and price to tighten up. Yeah, so ZM was also one that hit that daily 2 standard deviation move. It seems like this is one of those things where they're just kind of rotating out of right now. And we didn't really get some sort of a bounce outside of this, so it's not my favorite look as far as that goes for fading it. But yeah, I mean, I could see something like that taking place. For me, I kind of like to, for me, I traded CRM and Adobe. I looked at Zoom Communications when I got the alert, but I just didn't like how kind of choppy this intraday chart was, so I didn't trade it intraday. But if you're trying to trade it from a swing trading perspective, I mean, the price action doesn't look all that great, right? We're basically where we were at the close of last year and haven't gone anywhere, but we've seen pretty wild swings in both directions. So for me, this is not too clean at the moment. If it were to continue to break down, maybe look at that last year's VWAP where we bounced from before. But yeah, typically these larger moves, if you just look in the near term, we saw, pops back up, but just know that those pops back up, right, led to fade back, right? Pop, fade back, right? So if we get a pop back, just be open to the idea that you got to use that as context for being more aggressive to get out. And then ultimately you can build bigger positions when it makes a little bit more sense from a trend perspective and a risk to reward perspective. I called Target a while ago. Yeah, Target I was looking at, I think over here. I mean, I've been looking at Target, but I think it was over here when I originally called it out, or the most recent call out and up until now. And that was just because we were testing these prior lows. Price action was getting tight. It felt like we can see some sort of a pop. We got the pop, then we got an undercut. Now we're moving higher. So sometimes these fake breakdowns can lead to pretty nice moves here. So Target, I'd be keeping an eye on Target for this year. If we can get above this last year's volume weighted average price, I like the consolidations here. If we can hold, these shorter term trends, the 200-day, it's still kind of trending down here, but if we start to flatten out and turn back up, I mean, this is a wicked combination for a nice move that you can easily, pop right back up into 120, and that's a 20% gain in a big name, right? Coin. Yeah, a lot of crypto names are taking off today. I've been really kind of setting positions up for that. So if you're in the Discord, you've probably seen some of the trade ideas come through, like around crypto. Like I posted something about Solana, MicroStrategy. So some of these were coming on my radar for just. I know the trends are bad, but some of them started looking pretty good. So when I look at coin. Yeah, the trend looks bad. It looks like all crypto names, right? They don't look all that great. But what I was starting to notice here was this. and I don't know if this is on coin. My guess is it is. Yeah, it is. So I started noticing that the internals, right? If we look at something like just the RSI, where you have this low and a lower low, but yet the RSI put in an oversold condition and then a higher low. So we're seeing subtle divergences take place in some of the crypto names. And that's why I kind of got on my radar. I put in MicroStrategy there because it was, very bearish. Everyone's very bearish this. It's going to zero. It's, maybe they're right. But the thing is, you're still going to see pops and drops. So that's why, I was looking at this pretty clear defined positive divergence here. And that was the same thing in all kinds of other names, right? Mara, right? Boom, same thing. Very clean positive divergence there. Actually, in my opinion, this one's a little bit better, right? You see this low, you see a lower low, you see this positive divergence, bam, right? And then when I start to think through it, it's like, okay, well, gold's been a very top performer, all year. Bitcoin's been down. So the sailor to shift tool is basically telling you be out of Bitcoin, and it's been out of Bitcoin it's been out of Bitcoin since pretty much over here or somewhere around here. I'd have to look. And then, it just seemingly we're look pretty bearish here. Like it can break down. And that's the thing. Sometimes to break down, it has to squeeze higher, suck people in, and then go. And you can create opportunities in and around these areas. So I actually think that if we start to get rotations out of like silver, gold, right? Or even from a relative standpoint, you might see a rotation back into various crypto equities. So I've been watching the sailor to shift tool and kind of positioning myself for that to potentially take place. Like here's Solana. I'll do SOLZ. This is a Solana ETF. I was watching this trend, right? We broke through it. We're getting some pop today. But that's the same thing. I liked Ethereum. We'll do Ethereum futures. Look at Ethereum today, popping up here 5%. So not too bad. What's up, Doppler? Oh, cool, Brian. I didn't know that. Yeah, nice. Take a look here back at the S&P 500. We're up slightly on the trading session, just kind of doodling around in the weekly implied range. So nothing crazy here. We still have some time left in the trading session. I won't be probably live all day, but just so everyone knows, I'll probably be a little bit more quiet in the next coming days because tomorrow I'll be at the hospital all day. We're delivering our second child, so that's coming tomorrow. So after I get off this live stream, I'm going to just prepare a last couple of things. And then I'll be up and out of this house very early tomorrow morning. And I'll probably be there for a day or two. Yeah, we can look at Rocket. Thanks, Barcher. Yeah, Rocket looks pretty clean. I was looking at, I believe, this little flag here. I was watching this, and right now, this is a pretty clean look. Let me get this RSI off my screen. Thank you. Thanks, Matt. Thanks, Matt. Thanks, Am. Thanks, Remy. Thanks, Chris. Thanks to you, Dan. SPSS. Thanks, Robin. Thanks, BM. I appreciate it. Okay, so yeah, here's Rocket. Looks good. It looks really good, to be quite honest. It's building a nice base. It's in bullish context. It's kind of getting tight right up in here. So this looks like it's setting up for a potential move. So if I were to trade something like this, you got to look into risk and positioning, right? Those are the most important factors in all of this. So if I look at this, it's kind of this range here where we really haven't moved. When you break a range, typically measured moves of a range like this can be double in size, right? So if I were to just measure that range and I activate this drawing back out and I say, hey, if it breaks out of the range, where's a potential target? I say potential because these are just ideas and projections and potential forecasts. It doesn't mean it has to stop here. It doesn't mean it has to go there, right? It can keep going, but this is just an idea to give you a way to set up risk parameters. So there's a potential target. And then, if we break out, where would your potential stop be? I would probably, looking at this, would be right here and or right here. And that's how I would design my risk around. So from here to here, right, that's minus 10%. So, and you're basically $2 a share. So whatever your position size is, you have to be okay with losing whatever your size is, $2 per share, right? Who cares about it being 10%? What you care about is whatever size that you're going into, are you okay with losing 10%? Because the real, or the $2 per share, because in all honesty, right, like some people know this, I guess some people don't, but if I took this trade and somebody says, oh my God, you're down 10%.
To be well within the pharmaceutical space,
think through that, because some people might take a bigger possession and it might only be down 2%, but yet their portfolio is down significantly more. And my position would be, say my position is down 10% and my portfolio is down significantly less. So it could be the same exact trade, but if you're sizing differently, right? And if you're too aggressive and you're not taking this into account, right? We can take the same exact trades, but if our position sizing is different, we're going to have absolutely 100% completely different results. It's going to always be different. So you always got to consider the sizing. And when you look at the sizing, so say if my risk is down here, the potential reward would be up here, which is about, $6 per share versus 2. So that makes sense from a risk to reward standpoint. And that doesn't mean, once again, it has to stop there. Now, if you were to go down lower and say right here, then you're talking like a 1-for-1 risk to reward, which in a positive trend, you do got ideals in your favor. So that's a good sign. But remember, the real wins are going to come from higher reward trades versus your relative risk. So yeah, it looks clean. It looks good. These are the type of setups that I like. You just have to set it, get your, and then manage the trade throughout, because it might go up like this. It might come down like this. So what do you do then, right? Are you going to keep your stop here, or are you taking partial profits, or are you going to move your stop to break even if you get a pop up higher? So you got to think through some of this stuff as you enter trades, whether it's this one or whatever one, right? Yeah, so energy is a big outperformer. Can't say I'm too shocked right now with that. So we'll continue to monitor energy names. I saw something like Bloom Energy earlier this morning popping off. But like that, a couple other ones I was noticing was like solar names, like Enphase. Like, look at this. It's been beaten up, but we're starting to see some outperformance here, and it's very tight price action trying to break out of this base. And that's just Enphase. If you look at something like TAN, which is a solar ETF, this one's actually been showing strength, right? So this thing has actually been turning here recently. So solar names, pretty interesting. And then, yeah, somebody mentioned DVN. So we'll look at DVN. This is a name that we were watching, back here, and we're continuing to kind of put in these higher lows and press higher. So yeah, some of these energy names, they look pretty good. Let's see what Oxy looks like. Oxy, I remember looking at it over here. This one popped and dropped. Still in a downtrend. It's not as good looking as DVN right now, just from a charting perspective at least. I remember Halliburton. This one was one which traded over here, right? So Mike, why were you looking at it over here? It was a crappy stock. It looked like crud. Well, because price action was getting very tight, and look at this year-to-date VWAP. We were right there, and we saw an explosive expansion right through it. I captured some profits there. This move, I got the rest out, and then bam, we took off a little bit higher, quite a bit higher actually. LEU, this one's Centrus Energy, and this one I remember trading over here, and I held this one for 100% gain. Not the full-size position, but when I got out, it was just over 100% gain. And right now, we're actually building some sort of a base here. So this could be one to watch, right? We got pretty tight right here. Now we're starting to break through. So if we can kind of tighten through here and then break through this base, maybe perhaps names like this, we start to catch a bid again. But yeah, that was a great trade last year. Yeah, I can look at XOP. This one really hasn't gone anywhere, but we're dangling around last year's volume weighted average price. If we can get above this and hold, probably go and retest up in these areas again. And ultimately, you'd want to break through this range. In the shorter term, this is what we're doing. We're just range trading. So typically in a range trade, it fades back to the lower or the mid, right? And then comes back to the top and so forth. And that's kind of what we're doing. So I wouldn't be shocked to see it come up here, potentially tighten up and then break out. But if it breaks down, then you got to watch out. So that's what that looks like. Genrac, huh? GNRC. This is kind of just all over the place for me. It did get kind of tight over here after a strong move down. So I'd want to see, I'd have to see some sort of strength, but some of these moves are just so aggressive. Like, I don't want to get caught in one of these moves. So I'd prefer to see price action tighten up, maybe the trend improve a little bit to feel a little bit more confident. Yeah, we can look at NOW. Yeah, so now, I mean, now I had some sort of a news break over here, and that's a pretty bearish move. And then price action consolidated that move, and now we're getting follow through. So it's a bad trend, bearish consolidation, and follow through, right? That's typically what you see in trends, right? Weak stocks get weaker, strong stocks get stronger. And that's what we're seeing is follow through. So yeah, you may be able to play some bounces up in here, right? Especially on extreme moves, like kind of what we're seeing. But when you approach it, just understand that, like, hey, you got to use that context in whatever you're doing as far as position sizing. So if I look at this, I'm like, I want to go long NOW, right? One, it has to be smaller positioning, and I can't go all in at once here because why? The trend's bad, right? So the trend's bad. And then on top of that, I'd have to do once again, be more, I'd have a smaller position, but then I'd have to be more aggressive when it bounces in my favor. If it were to bounce in my favor and I were to capture gains. So if I buy here and it bounces up, like, chances are that this is the bottom is low because it's the same thing here, right? I thought this was the bottom, right? Oh, and then it bounced up and then we broke down lower. Oh, I thought this was the bottom. Oh, it bounced up, but then broke lower. So you got to keep that in context too. So you have to trade it a little bit differently as you would in a more bullish trend. And you have to, by doing so, you have to look at sizing differently and how you get in and get out too as well. It changes. It's a lot different trading something like this than it would be, something like RKT, right? Well, which we just went over, right? It's a lot different from a long perspective, right? This, I could set it, put my stop in, be good. Whereas if I'm trying to, like, for example, like if I was trying to short this, right, it would be the same situation as if I was trying to long now, right? Because if I was trying to short a bullish trend and it starts breaking out, right, not a great sign. If I'm trying to go long this or fade this very bearish trend, then I have to be aggressive when I get out or if I make in profits. And also, if I want to hold on to it longer, I have to start with a smaller position and potentially build into it and then try to capture something. But ultimately, you don't want to go too big positioning. You don't want to tie up too much capital in a crappy trend because the trend is your friend. SG, is that sweet greens? A lot of these, food retailers were getting pretty beat up. It's probably offer some relief here soon. This one, man, this thing is just like, yeah, I can see what you're saying. Maybe it's finding some sort of bait. It is getting very tight. Sweet green, I believe, I'd have to look into the short interest. I believe it's a high short interest, which can cause potential big pops pretty fast. I'd have to look into it. But yeah, it's getting very tight. Once again, not a great trend, but it's getting above some of these averages. So yeah, like once again, where would you be wrong? Where would you be right? Maybe it's this little tight consolidation. You play for a little pop, take some profits and so forth. Right? There's all types of opportunities in this market. You just got to make sure that you focus on the number one priority, and that's just managing that risk. UAA. Under Armour. Yeah, some of these retailers are just moving high. This actually kind of looked like the sweet green chart. Boing. So that's Under Armour seeing a nice move. What is Nike doing? Doesn't look all too healthy yet. And CLH, that's pretty noisy chart. Let me clear this drawing set. Didn't do much. It's down on the prior year, but we are above last year's VWAP, and we did see, I guess, some volume come in here recently, right? A nice move higher on some volume to back it, consolidated volume. Now we're pulling back and seeing some follow through. So yeah, perhaps this is setting up for something. Let's go into the weekly chart and just see. I look at, this, and it really hasn't gone anywhere for a while. So once again, take that into context when trying to play positions, because you're not really in a positive trend yet, at least. It's more of a range in a longer time frame. So it might take longer to get that, move that you want. And that's fine. It's just you got to be okay with that. So sometimes if you go too heavy too fast and you're not aware of that, you get tired, burned out. You don't want to hold it anymore because you're seeing other names outperform. And then you get out, and then all of a sudden it makes its move. So you once again, your execution, don't focus too much on the perfect entry, especially when you're trying to do stuff like this. Start small, see how it works, build around the core position, and so forth. And once you get into something that you like, you build out that full position, and hopefully at that time the trend's in your favor and you can catch the larger move and so forth. But right now, you just got to be open to the idea that it just continues doing what it already has been doing, and that's a lot of sideways movement. And that's for the longer term, right? If I'm looking at shorter term, okay, yeah, I can potentially play this right into here with a tighter stop, right? So if you're trading like smaller amounts, and quicker amounts, that's a different look at that. Yeah, Micron's been quite a beast. You're kind of getting a big too quickly and missing the move. Shoot. Light. Yeah, this one showed up on my radar a few times. I probably wouldn't be touching this one. Not right now. This is excuse me, bullish for sure. But just pay attention to the rate of the trend here. So I like these tight price action. Like this right here looked great. Why? Why did it look great over here? Because you have a rising 50 and price action caught up to it. The 200 was rising here too. And price action was digesting already a pretty nice run up. And now we see this massive breakout, but look at the rate of this. It's a very steep trend. So I can tell you this trend, it's not going to last forever. It's going to break. And when the trend breaks, it usually creates more wider swings. That's where distribution comes in, or the potential for the base to build longer. So this, yes, it can last and it can last and it can last, but eventually that trend is going to break, and then you're going to see it do wild swings back and forth, maybe a pop up higher, and it's going to get louder and noisier. And ultimately after that point, you want to see price action tighten back up, larger base, and then try to execute, a bigger pattern there. But here, right, this was really nice here. And then we had the volume to back it, nice moves up, good volume, and so forth. So there's opportunities, but just be aware of that rate of trend is aggressive. SKYT. Let's take a lookie. Skywata. Yeah, nice move today. Pretty loud and aggressive on a daily chart. So this is probably one of those where you have to look into. This was pretty fast too here on the daily. It's kind of just been sideways for the bulk of the day, but then we saw a nice pop up. I'm not a huge fan of trading this type of stuff, unless if it's really clean. I didn't mind it. I don't mind it over here like this, but I would have preferred for this to obviously not break down and then for these to catch up a little bit more. So we are getting these higher lows, and then we just broke this prior high, and it's not in a bad trend by any means, but I would prefer to see this kind of tighten up a little bit to give me a better idea for risk to reward. So if this continues to pop up higher, you know, which it very well could, even at that point, like I don't feel comfortable chasing these type of names. Like even I would look like if it did something like this over here, I'd be like, okay, now it's something that looks pretty interesting to me too. But you are seeing pockets of some interesting volume. If I were to trade something like this, I'd have to like give it real room. So I'd have to say like, okay, if I'm entering here for a move higher, I'd have to be like, okay, I can lose 38% on this. And you might be like, dude, you lost 38%. But I would just adjust my parameters to be like, I'd be okay with losing $8 a share is all that is. And that $8 a share, you know, that I lose would be what, maybe 25 basis points of my portfolio, maybe 50 basis points of my portfolio, right? Maybe 1% of my portfolio. So if I get stopped out and somebody sees, dang, you lost 38% on this stock, I'm like, yeah, that was 1% of my portfolio. You know, big deal. So it's all about kind of that adjustment. If you're trading these higher beta names, because higher beta names, they're really great for building a portfolio and, you know, driving it. But the only problem is if you don't size correctly, they can do a lot of damage to your portfolio. PL, man, this thing is just a beast too. You can see, once again, like see how this chart's marked up? These were the bases that I like, right? This one right here, very clean, rising 20, 50, 200, gave it time. Here we saw a nice pop up. So do you chase this stuff in a rapid rate of trend? No, you wait for the base to build, right? It breaks the trend and what happens? It gets more volatile, right? But then it starts to tighten back up and bam, we get that follow through. So what am I looking at now? Well, pretty much the same situation. We get a massive move. It's consolidating here nicely. And if it can do this a little bit longer or come in and just consolidate a little bit more, yeah, this would be awesome. If you're in it, I mean, this has just been a monster. So yeah, PL strong, right? Strong stocks typically get stronger. This is pretty strong. Rivian. Let's take a look actually at Rivian. I was liking the looks of this way back when. I was looking at it, I think over here, right in around this area. And the reason why I was looking at it over here, and this may have been a trade idea, I can't remember. I feel like I traded Rivian. I did trade Rivian over here. I remember that because on a 2 standard deviation alert, but I think I was looking at it over here. And the reason for that was in the volume. So if I pull this up, this was earnings. Then we consolidated and we had follow through. I didn't catch this. But then all of a sudden we had pullback and it was aggressive pullbacks. Bam, aggressive, bam, aggressive. And we're coming back into these. But then if you look at the volume, I was like, wait a second. It was coming in pretty hard, but it was like doing so on no volume after a big move up higher on good volume. And that to me was like, oh, this thing is just pulling back, probably shaking people out and could make for a good run. So that was interesting. And now what are we seeing? Well, we're seeing this thing follow through and well, take a look. Seeing pop up on some good volume right over here. That's continued. We see pops up in good volume and we're seeing a pullback take place. Where's the volume? It's not even here. So I don't know what this is going to look like here in the next, week or so because we have, repositioning, it's a new year, all that stuff. So if we were to still come in just right around these areas and kind of watch this trend here, and then all of a sudden we start breaking out this through 20, open the door right back up to 22, and perhaps this is setting up for something better because if you look dating back to 23 or whatever, this thing has been on the weekly time frame has been going sideways, and finally, right, what are we doing? Well, we're starting to get back above a rising 40, 30, 10 week. So this could have the potential for the stages of an early markup phase. Potentially. Right? So you just got to manage risk still. SYM, Symbotic. Let me remove this. It's just kind of all over the place for me on this one too. It's obviously a good start right here, kind of breaking out of this. It's kind of loud structure though. Not bearish, it's just kind of going through a larger digestion. What I don't like about these type of charts is you get these higher highs, which is nice, but you get in the lower lows too. So volatility is actually expanding. So it makes it really hard to trade. I like volatility to contract, to get smaller. And over here, right, this is technically, volatility contracting, but if it pops up and it goes like something like this, what if it puts in a lower high, right? Then all of a sudden you're looking at it kind of like this. They call these diamond patterns formation, where it could be larger reversal patterns and so forth. So for me, the trade here would be, yeah, if you were long, your stop would probably be down here. And then you're just playing it up into and around these areas, potentially a new high up in these areas. And then maybe higher from that point. Grab. I'll do RPD in a second. Yeah, grab. I've been kind of watching this trend line. Hasn't done anything though. I traded it over here. Price action got very tight. Why did I trade it? Well, 20 and 50 rising over here above a 200-day, above the year-to-date VWAP. Made sense from a risk to reward standpoint. Got a massive pop up. And since that move, it's been faded all the way back. I'm not in the position anymore because I scaled out. And now we are kind of just on the cusp of breaking down. So for me, on something like this, I would like to see it back above the year-to-date VWAP and kind of through this zone. If we can do that, then I would say, okay, now it's starting to open the doors for maybe some relief. But right now it's kind of on that edge. And I don't like to play, right here on the edge, because the probability of getting stopped out, wherever your stop might be, is typically higher. So if you want to take the stab at it, it would be, for me, if I look at this, I'm like, I want to be long, but I don't like trading on the edge here. It would have to be a pilot position. It would have to be just like, hey, I'm just going to get my toe wet, see what it does, keep an eye on it. It's not going to move my portfolio at all if it even drops 50% in a day, right? I wouldn't care. But if it starts to show strength and start to set back up, it's on my radar because it's in my portfolio and maybe I can add to it. That would be the thing there. Happy New Year's. Gold. Yeah, I'll look at, it was RPD first. Yeah, let me do RPD. Rapid 7. Yeah, I mean, this is just not, strong stocks get stronger. Weak stocks typically get weaker. This is an example of a weak stock getting weaker. So it has to prove itself. It's going to take time, right? I wouldn't want to tie my capital up in something like this. If it was a speculative, like, hey, something might happen, there can be a catalyst, it would, once again, take into consideration context, trend, and then that helps you decide position sizing. And the reason why you don't want to go too big in something like this is because it could go sideways for a long time because it hasn't proven itself, and you don't want your capital to just get locked away, for a long time and not do anything. Maybe you do, right? For me, my goal is to make the most amount of money in the shortest amount of time with the least amount of risk. So the only way that I'm going to size up positions is if it checks those boxes. And if it doesn't check all those boxes, I have to trade differently. Oh, you're welcome. Thanks, TLAL. Thanks, Matt. Visa. A little all over the place for me, but let me clear this off. The current view of Visa, is this distribution or is this just a large base? We shall know in hindsight, right? We shall know in hindsight. Is this a distribution phase or is it building a base? When I look at the weekly chart, right, we're in a markup phase, right? So this was a downtrend, but then we started to kind of turn up here. These averages, the 40-week, 30-week, we pop it up. We came back and we tested it. We started building faster bases, pullbacks, boom, base, bam, follow. This is a markup phase. So there's 4 stages, right? In kind of market structure, you have decline, you have accumulation, you have markup phases, and then you have distribution phases. And I don't know if this is distribution or not, but right now, that's what it could be considered. It could be considered distribution. Now, it could be also a base if it holds these averages and we start breaking up higher. So it's in that precarious place here that you just got to be a little bit more cautious and be aware, right? If we start closing back under the last year's VWAP, back under these averages, and they start trending down, that would be more of a cautionary sign for something like Visa. But if we can hold this and does something like this and breaks through these levels and heads higher, it's a strong stock in a strong trend. Strong stocks typically get stronger. And after big run-ups, they have to build bases, and that's pretty normal. I mean, look at Amazon. Amazon, it's been on a nice run, but this last year, it just did nothing. In theory, right? We saw a lot of market volatility outside of, our controls, but overall, it's doing nothing. So is this distribution? Well, could be in hindsight, but right now it's above the 200. That's still inclining. I just did Visa. So yeah, UPS, I think I actually have a position in UPS. Yeah, I got a position in UPS. I got a 2% position in UPS. So it's basically a starter position. I like UPS right here. This looks pretty good. I liked it down here when I was paying attention to it. But now that it's above last year's VWAP and it's kind of back testing it right here and holding it, the one thing that I don't like about this one, I'm going to clear this drawing set because it's a little loud. One thing that I don't like about it is that the 200-day moving average, it is actually still declining. And when you still have a declining 200-day moving average, it takes a while, right? You have to look back 200 bars, and it takes a while to start removing some of this data that's dragging it lower. And then it starts to flatten out, and then it starts to turn back up. So it tells us like the larger term trend is changing, but the medium term, 50-day, 20-day is sloping up. So as long as we can stay above the 200-day moving average, this new data is going to start calculating into the SMA, which will start to help, obviously, lose prior data that's below it, aggregate data that's above it, and start to flatten out. And if we look from here and we go back 200 bars, that is basically from right to right here. So if we look from right this point, this is taking basically this bar and all of these bars here, and this is your simple moving average formula, right? After all this stuff. So we're going to start losing this data, right? Which is above it, which means that it's still declining. And then we're going to start obviously having to get rid of this data. So it could be a while before we start getting rid of this stuff. And that's really going to help flatten it out as long as we can stay up in these areas. Now, if we get a shock to the upside, that helps change things dramatically and pretty fast. But take a look, right? If you go back over here, we're getting back above the 200-day. It was declining. We fell back down right here, fell back down. And that's basically been the trend. So it's finally starting to show signs of life. And this could be early changes in trend, and you can catch it early, but just be aware that, hey, if it is an early change, sometimes it takes more time. But look at this thing. I mean, this thing was just hammered for years, and now potentially we're starting to see that change finally. And that could be a good sign for something like UPS. So yeah, I have a position. I have a starter position there. CRDO. Yeah, so this goes back to what we've been saying about a lot of charts, right? If I go look at the daily time frame, you get these massive moves to the upside, right? These trends, when they break, you go through more volatility, and that's kind of what we're seeing here. I mean, look at this thing. This is what I don't like. I don't like these higher highs that are also followed by lower lows. It's volatility expanding. Could be distribution. I don't like seeing this. I prefer, if this is going to be building a base to go higher, I want to see this tighten up, right? Go sideways for longer and then start to move, right? NVIDIA did the same thing, right? If we looked at something like NVIDIA, these rates of trend, they break. When they break, you typically end up going through more volatility. What have we been doing? We broke down, we shot up, boom, we shot up, oh, we came back down, right? And now it's going through more volatility. So is this building a larger base, or is this giving us more of a distribution type feel? Well, it depends on your time frame, right? Remember, we have four stages, and within these 4 stages, right, you might look at the long term as a 200-day or 40-week, but then you have a 50-day, right? So then you have cycles within that cycle. Then you have a 20-day, so you have cycles within that cycle, because markets are fractal, right? So just keep that in mind. The 200-day is still inclining, so the larger trend is still up. You're getting some sideways price action here on the 50 and the 200, which are the shorter and the medium-term trends. And that's a lot of the AI stocks, right? AMD, I think what was AMD at? Pretty darn bullish, right? For at least from the near term, well above the 200-day. 50-day is starting to, once again, right, start to slope down, turn sideways. 20-day, it's a little bit noisy overall, but it's not like it's a horrible move. It's just we moved high and fast, and now we're starting to see volatility. It's typically where it starts to build larger bases, and then once it tightens up on those larger bases, they make for good opportunities. Even right here, I mean, I think I was looking at it. Right here, you have this higher low, and I was looking at this very tight price action, which makes for a nice little pop here. But now is it going to hold and continue, or is it going to fade back in? Because look at, right, we have this lower. If I were to invert this chart, I'd say it looks pretty bullish, right? You know, you have this lower high, it's getting tight here. So if a breakdown comes, I mean, pretty normal looking. So we'll see here if we can kind of break it and above and hold kind of where this white line is over here. And then it'll look a lot better. Dow. You know, this doesn't look all too bad actually. The trend is horrible once again. So yeah, trend's horrible. So it is not, you got to take that into account. But what I'm saying it doesn't look horrible is we're finally starting to see some higher lows form and price action get tighter. It is still well below last year's VWAP and a declining 200. So when I think about this, it's like if I trade this, I'm trading it up into this area, and then probably will be scaling out along the way. And then I'll look to see if it tightens up and then potentially breaks out. But a declining 200, this is going to take a long time to kind of heal itself. So, you know, you got time to watch this. Could happen fast, could happen slow, right? Typically, right? Price action has to prove itself. In the shorter term though, 50-day starting to turn up, 20-day turning up, 200-day still a massive like downward move. So pop up to the 200-day to test it. Sure. I mean, we haven't tested it, the 200-day since over here, since last year. It's pretty rare. We're going to hit the 200-day again. We're going to. And price action will always come back to the 200-day at some point, right? Or if price action goes sideways, the 200-day catches up to it. Zeta. Not too bad. Starting to flatten out here, build a base above these averages. Right? So if I'm looking at this from a risk to reward standpoint, right, the risk would be down here. Maybe it tightens up more to give me a better risk parameter. But it's holding up. It's overall didn't do much this last year. Now it's a new year. And it's kind of just range bound. I think I was looking at it over here, right? This was these type of trades I like. So we'll see if this kind of happens again. But this was an earnings move. So I don't chase it. I look for the consolidation. So when I was looking at it, it was this tighter consolidation right here. And then that led to a nice little pop. But it's loud pops, right? They're noisy pops. So it's like a lot of shakeouts can occur. So you got to take that into account too when you look at a stock that's kind of loud and noisy. I did do DVN and Oxy already. Just the energy names are looking pretty strong to start the year, which is not a great look for the markets, but it's a good look for some energy names. Oxy didn't look nearly as good as DVN, but, you know, I know there's a lot of eyes on Oxy, given that there was, I think it was like Warren Buffett that was investing into it or something like that. So perhaps that'll play out, but overall, like what's this been doing? It's been going sideways to down for this last year. So if we start to see these pick up, you know, you'd be nice, right? Boom, 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 come back up here. You could see some pretty big moves. But DVN, right, if we're looking at DVN, and no, I wouldn't chase up at these levels, right, from an intraday perspective. See how it consolidates, see how it plays out. But DVN, right, this is already put in the higher lows and it's getting above all these averages. So we're seeing a turn earlier in something like Devon Energy. SMR. I mean, this pretty frothy extension, so you're probably going to see pops. But once again, when you see big moves like this and it's bearish trend, or start to be a bearish trend, you got to take that into context about how you get in and get out of the positions and your sizing. So yeah, like you might get a pop, but remember, this was pretty low here and we got a nice pop. What happened? It faded back down. So if we get a pop up here, would you be shocked if it breaks down and, cracks these lows again at some point? I wouldn't be. So with that being the situation, right, we're starting to break out and come up here, you might want to scale out of some, take some profits, and then you could always look to see if it sets back up for another entry or re-entry or add back to it and so forth. But yeah, these extended moves I like to play sometimes. Just if you just look back through the history of the chart, like, yeah, that's pretty frothy, right? It's pretty frothy. Today it's up 13%, which sounds like a lot, but this is a high beta name, so you get moves like this pretty frequently. MLGO. Let's take a look. Right out of the gate, looking at this, I don't like charts that when I pull them up, they look like this. They're not. It's nothing that I trade personally. And then I'll look into the intraday, and I'm like, there's no volume here at all. Like, look at the volume. We're talking a couple 100,000 shares traded, but it's a $5 product, super illiquid. So I don't mess with this stuff at all. Right? You might get a pop, might get a squeeze. Cool, but it just, for me, I ignore this type of low volume, low price names. I don't mess with them. It's not my expertise there. Not to say that you can't make crazy money on these if you time them right, because you can get crazy squeezes. It's just, I don't personally do that. Yeah, Meta, a lot of sideways movement. Trend is unidentifiable right now. It's kind of flattening out. 50 days declining, 20 days up, 200's flat. So for me, when I look at this, price action has to prove itself. So we'd have to get kind of above this area. And if that's the case, that means we're back above year-to-date VWAP, last year's VWAP. That'd mean we're probably above this year's VWAP. And that would look a lot better to come back up to these levels. But right now, it's kind of on that edge where it's like, man, this thing could snap. So I want, for Meta, I prefer to see price action prove itself here. And I don't want to be too early because it's kind of just going sideways. Palantir is getting clipped. Yep. Palantir is getting smoked right now. Getting a lot of actually expected move things. Let me take a look back over here at the SPY. SPY's coming off still. We're at the lower weekly implied IVOL range. Give me a second here. Dun, 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 dun. Oh, I still have my Adobe position on. Dang it. What is Adobe doing? It's back to the lows. Still have that on. It's only a quarter position, so I'm up on the day, but now I'm down on the remaining position, which I should have just exited it out, but I'm still not that bad, actually, of a trading session for Adobe for me. I played it over here, and I got out over here 75% of the position. So 25% of the position is back to slightly down. Okay. This is why I don't like trading, or not necessarily trading live, but when I have trades on and go live, I kind of forget about stuff. Hey, Cortex, Happy New Year. LW. The difference between the weekly right here and the IVOL weekly is this right here is being derived from implied volatility, options implied volatility, but not from a direct expiration strike. These are coming right from the expiration, specific expiration. So there's a expected move formula that populates these. It averages them across a specific expiration. This is looking at implied volatility, and I'm plugging it through a formula to give me this range. These levels you can pull up on the Asherbot inside the Discord. So any asset that trades options, you can pull up an eyeball level. And that's the same thing here where you have daily and then you have the eyeball. So it kind of draws out these zones. And I like to use them both because they're both expected moves. But I like to kind of keep them both on my screen in like bigger products. And then my eyeball range, what just happened there? My eyeball, I don't know what that was. That was weird. I like my eyeball range for just individual equities. But on the bigger products, I like to use both. So like, for example, like the Mag 7 and stuff like that. But they're just expected moves. Okay. I don't know what that was. Yeah, so Cortex LW, Lamb, Weston. I think I mentioned really quickly on the brief yesterday. It's just one of these consumer staples. Like all of them are just getting absolutely smoke showed. That was a pretty bearish earnings move and reaction. I mean, that's crazy. This is 25% is down like 30% in just like a month. I don't know, man. That's crazy. So I don't know if there's something structural happening within the company, but also to note, sometimes these big, crazy moves, people chase back into them or rotate back into them when we start to see pressure on the markets, meaning consumer staple stocks. So that's kind of why I talked about that in last night's brief. I was scanning for just names that have been beaten up in the consumer staple sector. So this one was on the radar. These companies aren't going anywhere. I wouldn't think. KMB is a similar situation, right? Just big, huge earning move. Then we see these bounce backs that faded. Like, Kimberly Clark. I was looking at Clorox. This one had a little bit of a positive divergence. I was looking at like Tyson, TSN. Not as bad, but we're starting to see some strength there. There's a bunch of different names that I just quickly went over. I'm just watching right now. Let's see what else you said. GT, Goodyear Tire. Goodyear Tire looks like it's trying to consolidate here, but it's just below the last year's VWAP, and that actually looked like it mattered last year. So I would want to see it back above these levels. Right now we saw a pretty strong move back to this, and now we're rejecting from it. So I would like to see more time and price go by, and then break through. IonQ. This is one of those louder charts. I will say that IonQ, when it tightens up, I love it, right? This crazy nice tight up right here. Boom, it's above the 50, above the 20. Price action was getting tight. Great risk to reward trades here are created. And we saw that. I just deleted this stuff, but I saw that over here. I saw that over here, right? You'd have to go back to the trade ideas. I don't know if it was IonQ or QBTS or QUBT or Oklo or whatever I was posting back then last year. I mean, Oklo, I think we were looking at like $9. I didn't think it was going to go to 200. But that's what I like to see is this tight price action, volumes to start coming in. And right now, what are we seeing? Well, now it's loud and noisy. A lot of people have their eyeballs on it. So you got to really pay attention for it to tighten up. And right now we're at last year's VWAP. We're at above Verizon 200. So yeah, we can potentially bounce around here. But ultimately, right, we're just going through a larger consolidation that could lead to what? Could lead to potentially this being distribution. We don't know yet. So time will tell. And if you want to try, to trade it before we actually know, you just got to consider that when sizing your position and the length and the time that you plan on being in the position. Do I think there's a possibility we squeeze or resume? Is squeeze? I mean, there's going to be products that probably squeeze, yeah. But is there like a specific? Are you talking about like just the overall market, like squeeze higher? Is that what you're saying? I honestly, it's very hard to determine where the market's headed here in just a couple of first days of the year. I kind of need a week to go by. But what I can say is this: we are in negative gamma, right? So if I pull up just the SPX right here, this is the gamma flip line. At least it was this morning, basically 68, 66. When you're below the gamma flip line, what happens? You get sell side into sell side, you get buy side into buy side, liquidity dries up, volatility increases. It's typically what happens. Now, are we in like a high vol regime right now? I mean, we'll use the VIX as the proxy. I don't really like using the VIX, but you can use VIX futures. But are we in a high volatility regime right now? No, we're not. But we are now 2 days in negative gamma. So let me duplicate this out. 2 trading sessions in negative gamma. And when we get into negative gamma, this is that gray box, it opens the door for higher spikes in volatility. As you can see here, we get into negative gamma, and shortly thereafter, we actually did spike right here. Bam. So if you knew about this, it gave us some insight to be prepared for the potential for the storm to get worse, right? A lot of the times you get these couple quick day pops, boom, 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 boom. But even then, it gives you that insight. So right now, we're having a couple of day pop in negative gamma. So what can happen here is we potentially, if we remain down here, volatility can increase, and it can increase more dramatically if we start to get something like vol control funds to sell, CTAs to sell, and we're in that area where that could be a potential possibility. So it's right now, you got to be a little bit more cautious. Right? In these conditions, you got to be more cautious. Strategies change, position sizing changes in negative gamma, and they are definitely different when you're in positive gamma. Right? And ultimately, right, if I look at the SPX, what have we been doing, for a while now? I mean, honestly, it's basically, or let's look at ES. It'll be a cleaner look. Go ES. I'd rather look at this from like an hourly perspective. Let's do that. Let's go 20, no. 20 day, 1 hour. Let's go more time. Let's go 30 day. Let me make sure this is settings right. Just for contract changes. Yeah, so ultimately, what have we been doing? Nothing. We've been in this range, right? We've been in a very tight range overall. Not going up, not going down. And that could be pretty bad when we're in negative gamma, because the reason why is because if we do get some sort of a shock, we're like, I guess the way to think about it is that right now we're driving and it's raining and a little windy. And if it's rainy and a little windy, maybe a little bit of fog, is it smart to go 80 miles an hour in that? Not really. Like, yeah, you can survive just fine going 80 miles an hour because, maybe the storm ends in a little bit. But when the storm is kind of, picking up and it's getting foggy, it's probably not the greatest idea to go, pedal to the metal, speeding while everyone else around you is kind of slowing down. Because, why? Is because when you're in that environment and you're going full bore, the risk, the unnecessary risk, increases. Whereas if you were to just slow down a little bit in a bad environment, if there was an accident up ahead, or if you were to do something, chances are you can navigate it a lot better by slowing yourself down. And right now, when we're under this gamma flip line, it's foggy. It's a little bit of rain, not like a storm, not hail, nothing crazy right now, but it's kind of that neutral area where it's like, the clouds are out, a little bit of rain, a little fog. I'm just going to chill out. I'm going to take my foot off the gas a little bit here. And perhaps if we get back above the gamma flip line, the sun comes out, I feel a little bit more confident, going the speed limit. If you go faster than the speed limit, it's technically leverage, right? Just an interesting way to think about it. Yeah, Spy came in, tagged their implied move today, and we're just chopping around. Once again, this is Friday. It's very common to doodle around the weekly implied move. We're actually technically at one of the implied moves. We're kind of in that zone between the two. But even if we were to come back up here, right, very common, very normal. Let's look at market net flow. Green line's been going down. That's been suppressing the market here as the green line, the cumulative net premiums for puts or calls have been going down. So that's kind of stalled the market. Now, if this red line, if this was going up, market would look completely different. If the red line was going up, that means cumulative net premiums for puts have been increasing. Yeah, that would be a much more bearish situation, but that's not the case. Now, if this starts to flatten out and turn up, and this starts to stay down or potentially go lower, S&P 500 goes right back up here. Most likely. EOSE, yeah, we can take a look at EOSE. Energy Enterprise, yeah, just an energy name. You know, I'm not too familiar with this one, but it's been kind of choppy and volatile, right? Lower highs, lower low over here in the near term, but overall pretty bullish move up higher. And when you have this, once again, okay, you see how this price action was getting tighter over here. 20 was sloping up, 50 was sloping. Everything was kind of in line here. And then you get this massive squeeze higher. And what happens when you break that kind of rate of trend? It typically leads to more volatility and some sort of a base to being built. This is what you want to catch. Low risk, potentially high reward. Right now, where are we? Where's the risk? Risk would, I guess, would be this low. Okay. Potential reward, obviously these highs, best case scenario. But does it make as much sense as it did down here? The answer is no. The opportunity was better here than here. Now, if this chart didn't look like this, and say if it looked like, I don't know, say ignore this and say if it was like this, and we just saw like, price action continuing sideways and it wasn't crazy drift, it was this, or maybe like, something like that, a little bit tighter. And then we started to see the 50-day kind of pulling into in the 20-day. It'd look a lot better from a risk to reward standpoint. Here, we might be saying, well, it's getting very tight and we just broke out. Yeah, cool. But overall, what are we doing? We're coming back into kind of just this range that we broke out of. So I'd say it's something to watch. But if you're doing a position, where's your stop? Probably down here. That's minus 13%. So you're okay with losing $1.07 per share. Potential reward maybe up here. 46%. Sounds great, but I wouldn't, just be mindful of sizing with names like this. Like look at Enphase, right? ENPH, right? I was showing this one later. This isn't a horrible trend, but we're starting to see tighter price action. So even a pop like this, you have your risk down here, and if it pops up to the 200-day, your risk was right here and your reward was here, which still ends up being a really good and quick risk to reward trade. And perhaps it might even break further from that. And if it breaks down, okay, you're out. And if it turns back, it breaks down and comes back up, okay, maybe it sets back up for re-entry. Just managing expectations. How is your lower weekly EM on SPY above the Friday close? But how's your weekly above? Why is it above it? Is because we're underneath the lower weekly implied move, if that makes sense. So this is the weekly implied zones. This is where we closed last week. This is where we're trading. So we're outside of what the market expected, kind of. Right? Because I kind of range them out. Breaks from these two. So breaks from these can lead to dynamic hedging, significant dynamic hedging, where you get these squeezes and breaks lower. It's kind of what we're seeing here, but it's holding up near my eyeball range. And this is after tagging our upper daily implied move. So for me, this is fairly normal. Year end, year beginning. Take a look at Tesla. Yeah, Tesla is on my radar for a pretty good setup this year. I was hoping to see it kind of consolidate through this quarter. What I mean by that is if I look at the weekly chart, we're right there at new all-time highs. Now we're a week separated. I would like to see maybe this shakeout continue and then maybe build some sideways price action. And then I'm looking at this kind of more, higher lows, tighter weekly price action for a breakout. It's not the case yet, and I don't want to, be quick to jump in, but Tesla is known to get shakeouts. So the example that I can give you is just take a look here, right? We're selling off. Then price action starting to tighten up here. This is one of the trades that I placed. Bam, we broke out. Then I was, took some profits, got shaken out for the main position. But then we started to see higher lows here. And what did price action do? It started to get very tight once again, above the 20, above the 50, above the 200, and so forth. Fast move. And then from that point, we've been just going sideways. So I wouldn't count this one down and out by any means, but I would like to see, maybe one thing that you can do with something like Tesla is apply its VWAP, year-to-date VWAP, and maybe feel more confident when price gets back above it. So if I go into my side-by-side over here and I pull up Tesla and I'm looking at the daily chart, ignore the orange lines. I didn't update those yet. But if I look at this, actually, let's just take a look at the weekly implied moves right now. I'm interested to see where this is trading within its weekly implied move. I'll go update these right now. Okay, so this is Tesla's implied move, 496.48, 496.48. So we are trading outside of the weekly implied move. It's actually a pretty substantial break. I don't know if it's a 2 sigma break yet. 2 sigma would be 432.61. So right down here. Actually, I want to set an alert for Tesla at 432.61 because if we get a 2 standard deviation weekly move, that's pretty impressive to start the year. 432.61. Let me just see here. We only have 1 day left, so I don't know if it's going to reach here. But if it were to just reach here today, I'll just create an alert for today. And I'm not going to be around, actually, so that won't matter. But if we were to get down here, that's a 2 standard deviation weekly move. So for whatever reason, if we get down through this, I wouldn't mind taking pilot positions in Tesla. It wouldn't be big because of the context of the chart, but I would be interested in taking a look. Now, as far as the year-to-date VWAP goes, back to what I was saying, this was the start of the day, of the year, day, and so forth. Let me apply a VWAP there to it. What happened? Okay, bam. So there's a high probability at some point we go retest that. What VWAP did I trade this one at? This was at the, oh, okay, that's irrelevant now. I'm actually kind of interested. Give me a second. I'm just playing around right now. Okay, that one's the same thing. Broke down. Okay. So for me, there is a high probability that we go retest this year-to-date VWAP at some point. I don't know when that is, but that's typically the case. So if I were to try to execute into Tesla, it would be nice to just see it down here. 2 standard deviation weekly move that's pretty aggressive. It'd be outside of the daily implied move. And then I'd want to see what next week's implied move is. And if we get follow through to the downside, I'd try to trade outside of the lower weekly as like the second scale for a bounce. Why a bounce? Because we're in negative gamma. So once again, we're underneath the gamma flip line. So I look in these conditions, my strategy is typically to fade stronger moves. And I like to fade stronger moves that are outside of the weekly expectations, daily expectations, right? Those 2 sigma type moves. And then I like to play for a quick little bounce. So smaller positions, and I typically fade trade. In positive gamma, I look for more breakout trading. So here on Tesla, yeah, we're outside of this weekly implied move, almost near a 2 standard deviation move, rare, right? Rare to have happen. So if that's the case, maybe next week, right, if it sees some positive price action, we go and test that year to date. If it doesn't, right, and then I probably scale out of my pilot position. If it doesn't, we break down to another, lower weekly implied move, which if I look at Tesla, right, and we look at next week's implied move, it's like $20, about $20. So let's say if we close exactly where we are right now, you can expect the weekly implied move to come, around to 410-ish. Around that range, because that would be $20 if it were to break lower. Or, right, from 438 and you go $20 higher, 58. That makes sense? Oh, hey, what's up, Vinny? Happy New Year. I didn't realize that it was you that said it for the Tesla thing. What's up? Oh, will this strategy change for what I'm saving for kids' college account? Yeah, I'm probably not going to be trading it, at all. I haven't. I've do maybe some speculative type, like here and there, like, hey, I think that this name, right, can potentially be good in the future, but it's going to be a 2% position, and maybe it turns into like 10x's, like over the course of 18 years. Like, who knows? But overall, for like the kids stuff, it's probably just going to be invested in I mean, right now, I think I have Contra Fund. I think I have just some regular like S&P 500 ETF and just a couple of ETFs, and I don't care. Like I don't really test that too much or trade it. One, it's just be too stressful, and two, it's like long term. So, it's different environment, right? You have 3 buckets. You have your day trading bucket, you have your swing trading, and you have your investment, and you have to treat them all differently. Investing is a lot different than swing trading, right? Some people will be like, dude, Tesla is horrible fundamentals, and they're probably right? It's probably horrible fundamentals. That means it's going to go lower, but that doesn't mean that we can't capture a quick move right back up to 475 or 500. See, they can still be right, and it could go down to $100, right? I don't know. They could be. Or they might be incredibly bullish, and they're saying it's going to go to 1,000. Like, why'd you get out on this move? It's different things, right? It's just different for everybody. So typically when I say, when people are really bearish something, it's like, okay, what time frame? Right now on the 30-minute time frame, it's super bearish, right? But if you zoom out to the daily time frame and the weekly time frame, it's just going sideways. So always, it's just context, and then size positions correctly. You're probably not going to have the perfect entry, so why do you need to go heavy right out of the gate? Be strategic. Look for when there's breaks in what the market expects. The market expected Tesla to trade within this weekly implied move. They were dead wrong, and you could see that it's squeezing outside of it now because of it. Right? So now I'm like, okay, well, 95% of the time we close within a 2 standard deviation weekly implied move. So if this were to break down here, I'd be like, yeah, I mean, I don't mind getting a little bit there, right? Because if it breaks down further, okay, whatever. It's a small position, but 2, at least I'm executing in an area where it's like way outside of what the market expected. And for those reasons, I'm like, okay, I'm fine with it. I'm fine with it, once again, because it's not oversized. Now, I wouldn't be fine with it if I'm like, I'm going to go all my portfolio in at this 2 standard deviation move if it were to come down here. Then I'm not okay. Then I can't sleep at night. But a pilot position, 1.5%, 2%, nothing crazy, right? Whatever. Do that enough times, your portfolio would look kind of like with what mine is doing. My portfolio this last year was up 55% or 54%. Compounded on a 45% the prior year. And in the prior year after that, I think it was 20 or 30%. I'd have to look. Or the prior year, I think. I can't remember which year it was, but I did take out a large portion of my account for part of the down payment on this house. And then rebuilt it. So I'd have to look. Your oldest starts with first year of college next year. Dang, exciting. Are they moving away for college? Or are they kind of just more local? Good to see you too, Red. Bullish on metals into the new year. Right now, technically, yeah. I mean, there's no reason to be bearish. Gold, silver, and some various metals because they're at these highs. But also, I wouldn't be buying up here. I'd be looking for consolidation. So right out of the gate, to start the year, it's like, yeah, it's bullish because the trend's bullish. But in the more medium term, short term, it's probably pretty frothy. So if you'd like to see a movie that I made very specifically on silver, I think it was silver. It was on this day. So go to the video from 12/26 or the day after, whenever that was. And I started talking about implied volatility and why it'd be a horrible idea to buy right there. And I showed some very interesting data. In fact, anybody that hasn't seen that, these last couple of videos, I've been throwing some very unique stuff out there. Interesting insights that I just don't think anyone else came up with it. I just don't think it's out there. It's probably out there somewhere, but it's just very interesting stuff. About an hour from home. Not bad. Not bad. That's like, it's like, you know, breaking away from the nest a little bit, but kind of close by. That's nice. Now I'm eyeballing Tesla. I'm kind of just waiting. I'm seeing if I can make it down there. It's actually getting pretty close now. See, other people might be like, oh, I'm going to buy it. I'm going to buy it. I'm going to buy it, right? But then it keeps dipping. At least we know that this is more near. Now, I think it's probably near its 1 standard deviation move. If not, it already hit it. It's kind of right there. At least according to my eyeball range. Let me see here. It's probably about, it probably just tagged. It probably like legitimately is tagging it right now. Tesla daily, 436.25. A little bit lower. Okay. So it's basically in line right here with my eyeball range. Or the manual one on Thinkorswim. So a little bit lower. So it hasn't technically hit it. So 436.25. We're about to hit that. All right. Edit properties, 436.25, 436.25. We'll just make this one wide, that's fine. And then I'm going to remove my eyeball range for right now because it's a little bit different. And then this is, so this is the edit properties. Let me go, wait, no, cancel. This is properties. This is the weekly 2 standard deviation move. This is just 1 standard deviation daily move. In fact, DVN, which we were talking about earlier, just actually hit its upper 2 standard deviation expected move right now. Take a look. DVN, 37.87. That's 2 standard deviation move on the day. I know this because I have it on my daily alerts here on in the Asherbot. Let me go back to Tesla. And, you know, it looks like we're going to tag the daily implied move. Let's take a look at SPY and what that's doing. This could probably be dragging down the SPY. Sorry, give me a second here. There we go. And we're just hanging around the daily zone. That's nothing there. Any gamma changes? 6,800. So it's actually kind of lower. That'd be impressive if we had a breakdown to 6,800 today. Wow. That'd be really crazy. And then we're just kind of holding these lower highs. This kind of looks like it's walking a plank right here. We'll see if we can hit it. I won't be long. I won't be live for much longer. I have stuff I got to get done. Thanks, Tube. Palantir hit a 2 sigma lower move. Yeah, it definitely did. At 168.41. Palantir at 168.41 is right here. So, you know, 95% probability we come back into that. And when I look at like something like Palantir, right, this is the first trading day of the year, so it's a little, you got to be kind of cautious, but this trend is now kind of breaking. So technically, this would make for a good little entry to see if we start to base out and potentially pop for Palantir. And then given the context of the daily chart, you can say whether or not, like, well, would it be worth actually holding it? So we'll take a look. Let me edit properties here, make this pink. Go to daily. Yeah, let me remove this one. It's kind of just sideways, but it's not in like a bearish trend. So, you know, if you were trying to build a position in Palantir thinking that it's going to go higher this year, these are good areas to start because you're buying into like extreme moves on a daily. So you start small, and then maybe if we get another 2 standard deviation move, you start again small. Then is, you know, there's a highly likelihood when you get these extended days and you get notified about them, Like what happened here? Like it went down lower, but then popped up higher. It went down here, went down lower, popped up. This big day went down lower, based out, popped up. So we're getting another one of those type days. Even right here, it was a pretty big down day, popped up. Down day, popped up. All right. Let me go back to the intraday and then look at Tesla. That was the one that I was kind of interested in. Would I short it 2x? No, Matt, I don't really short the market. So I don't really do that. Yeah, unless if it's a really clean daily chart. But when I show, so just for context, when I short, so my long trades, my short trades, one, I'm probably long 90 to 99% of the time, right? 90 to 90%. So if I am to short, let's say, sometimes that's less, let's go, 1 to 5%, right? Of the times that I short. If I were to short, one, the max position sizing is 1/2 typically max the size of what my max long would be. So my max long can get up to 10%, maybe even 12% at times, depending on how good it's doing. That means my largest short position is not going to reach more than typically 5% of my portfolio. It's I don't like shorting because it's too fast. It's too fast, too quick, and it typically just requires more effort. And it's not like it adds that much of a benefit to my overall portfolio. Now, if the market conditions severely change, maybe I'll start looking into it a little bit more. But the market's been basically directly up. So when we're in negative gamma, instead of shorting, I look to fade extremes. And that's worked for me pretty well. If I start to short, there's going to have to be some big changes in the market. But right now, it's like backstopped, and you can have a quick move, but then all of a sudden it rips right back up in your face. And it's like I don't really feel like holding on to that. So for me, I don't short hardly. So 1% when you short, it's no, actually I don't short MicroStrategy. I look for longs. I've looked on longs on MicroStrategy. I shorted miners this year. That was my only, I think, short this year. Miners and silver. You might be saying, well, those things are straight up. Exactly. I look to fade them. I faded those twice. I faded silver. I faded miners, and I did it with just massive tactical precision. And the move was so fast, I got out the very next day. It just happened and I was out. In fact, actually, silver, the most recent one that I shorted was actually on this day. And then I actually ended up going long at the following day or the same day. So I was short. Actually, so I'd have to show you the position. I actually shared it in my Discord, not like the alert. I don't do alerts or anything like that. But here's the weekly implied move for silver, right? And when I made the movie, I took a PSLV. What's the name of? No, not PSLV. What is what's silver's short ETF? I already forget. I have to go back into my thing. It's ultra short silver. Why am I forgetting the ticker? PSY? No, I don't. Somebody help me here. Until somebody sends it, I'd have to go. No, not SLV. The ultra short silver. It's just the inverse ETF. That's the one that I used. I don't know why I'm drawing a blank. No, Dust is miners. This is actually shorting silver, the inverse ETF. I'll go back into my performance. Give me a second here. Trade, orders and trades. Trades. All right, where are you? ZSL. There we go. Okay, ZSL. Oh, there, everyone's saying it now. Okay, there we go. Yeah, so ZSL. So I was looking to short it on that huge day in silver. Let me go back to daily. So this move right here, right? It doesn't look like much, right? This move right here. If I go to silver, that was this day right here. And this kept on squeezing and squeezing. And I was like, oh man, it just keeps going. Maybe we close the highs. But this is the type of fade that I look for. It's super aggressive. And then when I looked at the weekly implied vol, it's just this type of stuff just makes sense to me. Like I look at the implied vol, I'm like pulling this up. I'm like looking at it, I'm like, dude, it's reaching the highest level in history. There's only been a couple other times prior to this that it's been there and they led into pivots in the market. So I was like, all right, if I'm going to short, I'm going to execute here. It's going to be a smaller position because I'm fighting a massive squeeze potentially. And if I looked at ZSL on that specific day, we'll go to we'll go into this time frame. We'll go back, 5 days, whatever it was. My entry was right here in the after hours. That was my entry. So this big day, right? This was down, 12% or whatever it was. Technically, no. Sorry, it was even more because we gapped and moved. So it was down 12% just on the cash session. And I was like, all right, I'll just do it here. And then before the market even opened up, I was out over here, the bulk of it. So from here to here is 18%. And I wasn't even in the cash market session. And the reason why I started getting out was because of this. Because on that next day, what was silver doing? It was pulling into its implied move. So as we started breaking into this area, I was like, wow, this is a strong move. There's probably going to be followed by dip buyers at some point. So then I was out of that and I bought silver. I bought SLV. And then I was out of it. Actually, unfortunately, I think I was out of the bulk of the position the same day. I don't think I held it into this day. That was my mistake. I think I got out of it this day. So yeah, I'll look into my short, right? That's how I shorted that. I get, obviously it's lucky, but also I'm looking at things like implied volatility, not just some random level on my screen. And when I shorted miners, I was actually focused in on the correlation break between silver and miners. There was a big, massive break. Silver was breaking down while miners was pressing higher. That's a bad sign because they typically have a very strong positive correlation. And if silver, the metal itself, is breaking down, chances are that move is going to catch up. So the miners I shorted and it was like a day or two and it was like I was out of the position. It was a pretty good size and I was like, I'm out. And then the miners went higher. But if I look at like GDX right now, look at how it's going down, right? And what is silver doing, right? It was, this went up and then down. What did silver do? Actually, look at 1226 high. I'm going to go back to silver. Oh, no, they both made new highs on 1226. Okay. I was going to say if silver was already breaking down, but gold miners were up, that'd probably be another break in that correlation, but that's not the case. Now, is silver moving as expected for the week? I'd say, yeah. It's getting a lot of volatility, right? This one day down was like 8%. Crazy move in silver. That's not typical. But in theory, it is typical. Why? Because the implied volatility is high. So it's moving within the expectations of a week. So people are going crazy and losing their mind, but it's like, dude, why? I saw somebody post it's a 9 sigma move. I'm like, no, based off of what? You're looking at historical data? What is the market pricing in? That's the most important aspect. That's where you really get your standard deviations from. And it was like this day, right? They said it was like an 8 sigma move or 9 sigma or something crazy like that. And they're like, that's, the chances of getting struck by lightning are higher. Very smart individual said this with a large following. And the question I asked was like, what is this based off of? Because implied volatility, this was a 2.5 sigma move, which is rare, but it ain't no 9 sigma move. You crazy? You crazy? What are you, crazy? Okay, let's go back to Tesla. I wanted to see, what's happening here. See if we hit those levels. All right, okay, here we go. We're breaking the daily implied move. We got the alert that actually came through on the Discord just then in the Asherbot. And this is the 2 standard deviation move right here. For the 2 standard deviation weekly implied move. Now remember, it's 1 standard 68% of the time, but it's also tagged frequently. Your real outliers are in like 2 sigma moves, okay? So for example, Palantir, like what's that doing right now? We marked that off. It's probably falling with this right now. Yeah, Palantir breaking from its 2 standard, and it's kind of just holding this trend lower. Let me activate this. Holding it, try to break it, but it's it's just holding this trend lower. So still, 95% of the time, there's a 95% probability, right, that we close within 2 sigma moves. So this is a rare, kind of more of a rare occurrence taking place right now based off of implied volatility with something like Palantir. Okay, let me go back to Tesla, kind of watch this, how it plays out. And then we're looking over here. We're seeing a break from this weekly implied range, getting pretty frothy. And if I go back to NQ, this is why I was like, hey, you know, it's kind of like walking a plank over here. So perhaps, maybe we are doing this final phase of a washout. Maybe it's something more, right? If I look at market net flow, the green line's been just going down. This is what's really suppressing the market. But the red line's still not picking up at all. And the market overall is down 25 basis points. Heavens no. Heavens no. Come on, Tesla. Give me a 2 standard deviation weekly move. Yeah, you got to look into why miners track the price of silver. You got to understand correlations. And correlation breaks. That's more like institutional hedge funds. They'll pay attention to correlations, right? Beta, and they'll look at like correlation matrices and stuff like that. So you need to understand shifts in correlations, especially when you're looking at things like rates, the dollar, oil relative to the dollar, like 30-day, 15-day, 30-day, 90-day correlations. That's incredibly important stuff. Yeah, correlations change, but if you look historically, right, at correlations, and then you start to see shorter term breaks in correlations, it's just an important note, right? But then you got to tie that in with something of substance like expected moves. That's like the only real leading indicator of risk. It's something that the market's pricing in. And then you have to tie it into probabilities where you look at distribution curves, right? And just understanding just basic probabilities there. It gets tricky because then you have to deal with like tails and skew and kurtosis and all the fancy mumbo jumbo. But for me, I try to keep it as clean and simple as possible, not I try to make it just so it's easy to make money is what I try to do and utilize that as that. When it gets too quant based and is just overload, you kind of need a team, right? If it's just one person, a lot different. You can build models, use models and stuff like that. For me, I keep it pretty simple and it works. Go figure. And by the way, genius does fail. Just look at long-term capital management. Smartest people in the room blew up. I don't put myself in a position to blow up. I am working on a new feature for Patreon. Yes, it's a build out for just the updates on the Asherbot. In the Discord. Okay. Got a little bit of a flush there. It's not really doing anything here, though. Look at energy today, the energy sector. Boom. Nice move in energy. That's what you want to see. Energy outperforming the market right out of the gate. Maybe it lasts, maybe it doesn't. 10-year yield also up. Man, it's on last video too, I showed like the 30-year mortgage rate. But also it's the same thing with the 10-year yield. It, if you follow that same analog, that same path, it typically goes higher. Not to say that the analog is going to have any predictive power, but if it does follow that same path, you get higher rates, potentially higher move in a dollar or pop in a dollar. Not good for markets necessarily, seeing those assets. At least not good for various parts of the market that have negative correlations. XLF, you say no good? Yeah, financials ran pretty far, pretty fast, so we're seeing that kind of back off a little bit. That was getting pretty frothy. It's not like it's a far away from new all-time highs, but yeah, it did run far and fast, so got to see how that consolidates. I don't know if I'm going to get my Tesla thing off, but I thought that would be fun to just kind of execute it and follow along. We'll see. Not too far off of it. A few more bucks away. Can you bring it? All right, let's go back to Palantir. Palantir's still following that trend. I mean, not a horrible idea to start building a position on break to up here. If you're already in it, probably would have gotten out over here, and or it was a small position. You kind of just hold it to see if it can break up to the upside, but not too bad looking there still for Palantir from one or more of those fade intraday perspectives, and then potentially turning it into something too, a swing trade if it makes sense to, if you're in the money. And you might say, well, why? It's doing bad. That's exactly why, right? You wait until it's outside of what the market expects by a wide margin, right? Instead of buying it here and then try to scale it in and try to scale it in, you're buying like outside, you're following a trend, and then you're looking for a pop back up, maybe even a daily VWAP. Not to say that's going to happen today, but this last month I was doing this pretty much exclusively on my Interactive Brokers account, and it was an incredible month. So don't try to hit it out of the park with one trade. These 2 standard deviation moves, I track about 700 different stocks. I track all the stocks that have weekly option expirations. Why? Because they're more liquid. And then I get alerts on all of those in the Discord. Separated right now, daily, weekly, monthly. And then in the new update, I'm actually going to break out the 2 standard deviation, 3 standard deviation moves in its own channel. So you just get that one channel with those. And then I'm going to add another channel that just gives it for the larger kind of like ETFs like SPY, Q, IWM, and then like the larger market cap names. So like, kind of, because there's a lot of names, right? So it's kind of just a filter mechanism. But I guess I'll give you some insight into what I'm doing as far as the update goes in Asherbot. I'm now working on something that gives you the ability to message the Asherbot in the DM, have your own conversation, and create a list of names that you want to get alerts on specifically. Let me reiterate that because this is a huge update, and this is why I'm saying that I probably have to up the pricing here in the near future for newcomers, that aren't grandfathered in. But once again, you'll be able to go into Discord DM, message the bot, and create a list of names. Let's say you have 10 names that you're trying to track, 20 names, whatever, my limit is going to be. You'll be able to send the message to the bot and say, track these names. And then what you'll be able to do is get notifications of any of those names that hit. Because if you have alerts turned on right now, you get too many alerts. So this is a mechanism to really kind of filter for what you want. Pretty darn sick. So that's the update that I'm working on. And by the way, the Discord is only $16 a month. And that's just one of the features. That is just one of the features. All right, Tesla. It ain't gonna give it to me, huh? I'm about to hop off the stream anyway. I'm getting near that time, I think. AI Dan I's verse voice. XLE is up now 2%. Look at XLE just exploding. Kaboom! Be patient. So one way to trade like something like energy stocks or XLE, right? If you, once again, you got to be patient with these things. You can go into, let's go side by side and we'll go pull up XLE just so you have an idea. When things get frothy, right? What? Sure. Okay. So XLE on a big run today, and it's been straight up, right? So would that be smart to enter right here? Probably not. So what would be a good area to enter? Well, market anchor VWAP right here on today's, sorry, right here. On the day, which is also going to be the year-to-date VWAP, and perhaps even if it goes up higher, look for maybe a reconnect of this. Maybe it pulls in, maybe it comes up, sets up like this and gives you a better risk to reward. So that's the year-to-date VWAP. Now, if it starts cracking below this and holding below, right, I'll look in the direction of the 5-day moving average, seeing if it holds, comes back up, re-breaks out, that would be an opportunity there too. But if you chase this move, yeah, you can get lucky and it can keep going. But remember, where it came from to where it is now, you'd be buying the extreme. Just kind of like, you know, what we're doing here in theory with Tesla, right, is would it be smart to short? Would it be smart to short Tesla right here? Maybe in hindsight, but in reality, if you look at, you know, these type of moves over the course of time, it ends up saying, you end up coming to the conclusion that no, it's not the greatest time to short the lows after a strong move down. You wait, right? You wait for the consolidation. You wait for a pullback up, and then it puts in a lower high and then breaks down from there. And then maybe that's the continuation to the downside. Like here, if you shorted here and blasted off, you're out. But what did it do? Put in a high. It literally did exactly what I just drew out over here. So then you have better risk or reward and it followed through to the downside. Right? What about right here? Would it be good to short right here? No. And it bounced up. What did it do? Boom. Cracked down. Right here. Good time to short? No. Oh, no, you know, I'm out. Oh, no. And then all of a sudden it put in the lower high and then cracked the lower low right there. So would it be good short right here? Maybe in hindsight. But history tells us, not on this, but on all assets, that if you short lows or if you buy extreme highs, it's not the greatest entry. So that's fine. But take that into context for position sizing. If you want to be a part of XLE and you're not going to be around tomorrow and you're like, I'll just enter now because I'm holding it for a while. Okay, start small. Because then if it comes down here, you're not worried about it. In fact, you'd probably end up buying into it again. And you build into the position. Context. Look at the context and filter that context into sizing and how you navigate. That makes sense? Let's go back to Palantir. Both Palantir and Tesla not really doing what I want them to do. I was hoping to see some sort of a move here so I can show you what I would do as far as the trade goes, but I'm just not getting it. So why is XLE but oil down? Yeah, let's take a look. So we'll pull up. We'll pull up crude oil futures. It's flat, down 33 basis points. And then let's go look, we'll just pull up USO, I guess. Where's that at? Down 39 basis points. So ultimately, like why would that be? Well, there's typically a strong correlation. But remember, the correlation, we're not looking at like a daily correlation. So sometimes you often see these breaks, but you typically on trends higher in oil, you get higher energy prices. So that's the main thing. Now, oil, like if you look at USO, what's it been doing for a while now? It's been kind of going. It's been going basically sideways. And what has energy stocks been doing? Energy stocks have been basically going sideways. So there's the correlation still there. You get these sudden breaks, and then think about the timing as when we're asking this question. This is literally the start of the year when we start to see interesting flows take place, and which is kind of why I've been saying maybe this next week, after this week's over into next week, we get to kind of normalize, see what the market's digesting, see where it wants to go, see if there's any interesting trends taking place and shaping up, and go from there. Another interesting thing about oil is, I mean, look at rates today. Rates are going up higher, and oil's going down. Well, it's flat to lower. And oil can be a good leading indicator of where rates go. So that's also kind of an interesting thing taking place right here. Now, in a video, not this last video, but the one prior, I think, I was showing the times where energy or where 10-year yield actually like led oil in a couple instances, and it led to an oil pop. Perhaps that's happening now, or perhaps oil is telling the truth. It's going lower because the trend's bad. That means, eventually that's going to pull rates down, and that could be good for the bond market. And perhaps what does that look like? Maybe that, the bond market has been horrible, right? Look at bonds, right? So this break lower is not a really good sign for markets. However, what happens like if there is panic in the markets? Perhaps maybe bonds, once again, people look to bonds as like that flight to safety. That's not the case right now. So. Yeah, don't get wrapped up too much on one single trading session, especially when you start to look at like where are we in the context of things like end of month, beginning of the month, right? End of quarter, beginning of the year, beginning of quarter. And then we're moving into a new earnings season too, right? So the first to report earnings is going to be financials, financial stocks. That's the first on deck. What is going on in my portfolio right now? Oh, hey, did anybody trade Palantir? There you go. Hey, there's Palantir popping off of its little trend. Let's see if it breaks into the 2 sigma move. Let's look back at Tesla. So Tesla was the one that I was kind of interested there, but that's moving up higher there. We're getting a little bit of a pop in the markets. Let me go back over here to gamma levels, and we'll look at SPY. Once again, we're just doodling around the weekly implied zone. Market net flow stabilized itself. Green line's down, but it's flat. Red line slightly above it, but there's no divergence between the two. So chop. No clear read. This looked pretty bearish, this breakdown, and we kind of got this undercut flush. That'd be funny if like people shorted this at the lows of the market, right? And like looks bearish, looks like it can break down further. But what would be funny is if it like snaps back up at that point. Markets suck. Markets are tricky like that. They try to fake the most amount of people out as they can. Yeah, horrible price action in bonds, that's for sure. Yeah, Palantir, yeah, nice little pop there for anybody that traded that. So does that make sense now? Like what, why I'm talking about how I'm kind of integrating this into, daily trades and so forth. Ultimately, where can this end? I don't know, but like say if you traded this and it popped up, like say if you traded it, you were even late, say if you traded it late or whatever, it's still a 1-to-1 if it comes to the 2 sigma move, which is the higher probability. And then imagine if it starts breaking further. But then you look at the daily chart, and it's like, okay, maybe I'll scale some out of the day, my day trade, and maybe I'll hold it to see if it bounces up higher on a daily time frame, because it is technically in a more of a bullish context. It's just in a range, but it's still above a 200-day that's rising. It's below a 50, below a 20, but this has been one of those high beta names, highly watched out names that people have bought those extreme dips. So here you go. There's that 2 sigma back right at it. Where it closes, I don't know, but now you can at least see, hey, risk reward, right? Maybe here you tried, maybe you did buy here. Now you're still in the money. It went down beneath you, but you're technically still within that 2 standard deviation move. So if it even goes up higher, your risk to reward is not that far off from a 1-to-1. That's why I typically say you start small, right? You start small and then maybe try to scale in. So if this was one entry, perhaps this was your second scale, and then your average entry would be right in the center of that, right over here, which would be a 1-for-1 risk to reward right now, right out of the gate on a very short time frame. So you may take out partial profits then, or remove one of your dots that you entered in at, right? So you had, a 1 dot entry over here. You had a 1 dot entry over here. You scaled 1 dot right over here. You're in the money, right? That is the first time, Arturo, hearing that about Thinkorswim. You'd want to reach out to their support team. I don't know anything about that. I run on a Mac, which I've been considering switching to a PC, to be quite honest, but I do like my Mac. There's some stuff that I want to run that only is on PC. All right, everybody. I think I'm going to call it there. I got some stuff to do. I have a baby being delivered tomorrow. Wait a second. I have a new baby on the way coming tomorrow, so I'm excited about that. I got a little bit more stuff to do. I've been preparing for these last couple of weeks, so you probably noticed less videos being produced. That would be because I've been preparing. So I figured it's a new year. I got some free time. I'm doing a live stream. I put out a video yesterday, and take a look. If you're in the Discord, I'll still be kind of active there. I'll message, but just be aware that I might be tied up, clearly. All right? So hopefully everyone has a good start to this new year. I appreciate y'all for tuning in. For those that did, came in, that subscribe, that interact, thank you. The interaction helps the channel grow. A little stupid thumbs up, or the sharing of it, or tagging something that you liked on the video or the stream, and then tagging me on X so I can repost it. All those little things matter. They help me out. Being a Patreon obviously helps out. And I try to over deliver there too as well, because that's not free, but my YouTube and everything else is. So with that said, mahalo. Thanks, Matt. Thanks. Thanks, Murillo. Thanks, George. Nuclear. Kumar, thank you. See you, Dan. Trading Drew. It's a girl, so I have a boy that just turned 2, Dan. Now I have a baby girl coming. Thanks, Rocky. Thanks for being saying. See you, Vinny. Thanks. I'll talk to you soon, Vinny. Husker, Zanir, Plaz, James, everybody. Sorry if I missed your name there. Appreciate y'all showing up. Hey, take a look, man. There you go. It's breaking out. It's scraping back within the 2 sigma move. Really quick though, did anybody trade this? Did anybody trade Palantir today? Based off of just kind of what we were discussing. Anybody here make a few bucks on this? Let's see it. We did look at LDOS generator. Thanks, Akash. We did, generator. I did that. That was my first stock I think that I pulled up, was from your post earlier this morning. My first from the community. Dollar Tree, by the way, just hit its upper 2 standard deviation move. We talked about Dollar Tree yesterday. So what's Target doing? Is it outperforming Target a lot? Target's doing pretty fine right here too. Oh man, interesting price action. All right, enough for now. You got some, for a swing. Made $100 on it. Nice. You did on Tesla. Nice. So you got in a little bit earlier than I wanted to, but still played out. So that's nice. That happens all the time. I miss a lot of names. All right, y'all. Thanks, Doppler.